What if I told you there is a tool hidden inside every trading chart that top trader swears by, but almost nobody understands?
We were just so confused.
It's called the Fibonacci Indicator, and once you know how to use it, you will never look at the chart the same way again. In this video, I'm breaking it all down, straight to the point, no complicated math. Just real strategies you can use today. So stay with me until the end because I'll show you exactly how Fibonacci retracement can help you predict price movement before they happen. And if you've ever drawn those colorful lines on your chart without knowing why, this video is for you. Alright, let's get into Fibonacci. You've probably heard of Fibonacci levels. Maybe you've seen those weird numbers. 23.6%, 38.2%, and 61.8%, plastered across your trading chart. But where do they actually come from? They're based on something called the Fibonacci sequence. It's a series of numbers found in nature, art, architecture, and yes, even in the financial markets. The magic number here is 0.618, also known as the golden ratio, and traders use this ratio to map out potential retracement and extension level in price. Let me explain with a simple idea. Markets move in waves. They go up, then they pull back, but not randomly. That pullback, called a retracement, often stops at very specific levels, and time after time, these levels match Fibonacci ratios. It's like a self-fulfillment prophecy, because thousands of traders are watching the same levels, and when enough eyes are on the same zone, that's where momentum shifts. Let me show you how to use this step by step. Step number 1. Pick a clear swing high and swing low, either in a strong uptrend or downtrend. Step number 2. On TradingView, click the Fibonacci retracement tool. Drag from the bottom to the top in an uptrend or top to bottom in a downtrend. And step number 3, you will see key levels appear: 0.236, 0.382, 0.5, 0.618, and 0.786. The most watched level is 0.618, the golden pocket. This is where price often bounce or reverse. Combine this with support, resistance, or trend lines, or even stronger signals. Let's look at a real chart. Here's the perfect run-up. Now watch this pullback. Boom, right into the 0.618 zone. Now look what happens next. Buyers step in and the next leg higher begins. This isn't magic, it's Fibonacci. Now, quick warning. The Fibonacci tool doesn't work in isolation. Don't just draw lines and expect a bounce. Always use confluence, check the volume, check the trend, check the news if you are trading crypto, and avoid Fibonacci levels on random price action. It only works well in clear trends. In strong trend during pullback to set potential entry zone or take profit targets, with confirmation from other tools like RSI, MACD, or trend lines. Fibonacci is one of the most powerful tools in traders' toolbox. Not because it predicts the future, but because it helps you frame the market. It gives structure, it adds probabilities, and it sharpens your edge. So if you've been ignoring it or using it randomly, now you know how to apply it with confidence. Have you used Fibonacci before? Let me know in the comments. Was that helpful or confusing? What trading tools would you like me to cover next? I'm always reading your feedback and love creating content that helps you grow. If you want more videos like this, smash that like button so I know to make more trading tutorials. Don't forget to subscribe, and I'll see you in the next one.